Hey guys, and welcome back. In today's video, we're going to be putting a spotlight here on the Aspiration Flagship Fund, ticker symbol ASPFX. This is billed as a conservative mutual fund, lower risk, lower return. So we're going to dive right on into the numbers. Its net assets are a little over 13 million, so certainly on the smaller side. I'd rather be on the smaller side than on the larger side for these funds, so that's not going to scare me off. Heading on down here, its net expense ratio is 0.5%. Usually with these actively managed mutual funds, that number is going to be somewhere in the 0.5 to 1% range, so we're on the lower end of that. But with these very conservative, low risk, low return type of funds, you really don't want to be paying much in the way of a expense ratio because your returns are generally going to be a lot less, however, more consistent than more risky funds. So that's really going to cut in to your bottom line whenever you have that expense ratio there. So that's something to keep in mind. Its yield is a little over 1%, so that's going to be the dividends payout with this particular fund. Its holdings turnover percentage, right at about 14%. Again, this is a very conservative fund. You would expect that to be a low number, which it currently is. Its inception date, October 14th, 2014. So this is a fund that hasn't been around all that long. This would worry me a little bit more if this was a riskier fund. You like to see a longer track record with those types of mutual funds. But the fact that this is a very conservative type of fund, it hasn't been around all that long, but the fact that it is conservative, it wouldn't worry me quite as much, but generally you like to see at least 5 to 10 years of data behind a mutual fund to get a good idea of how it performs over time. So moving on here over to its holdings. As you can see here by its portfolio composition, extremely conservative, 33% in cash, a little under 30% in stocks, and a similar right about 28% in bonds. So this is extremely conservative investing portfolio composition. You can see its sectors, it's all across the board: technology, healthcare, industrials, financial services, consumer cyclical, all things that you would expect to see in this type of fund. And then moving on down to the top 10 holdings, which is about 53% of the total assets. And basically what this fund is doing is putting its money and spreading it across a bunch of different ETFs and other types of conservative investing opportunities. So you're not going to see like single companies or things like that and more risky. It's just spread across a bunch of ETFs and a ton of different assets. So again, very conservative. So now let's move on and compare this return historically to the S&P 500. So as you can see here, not great. Throughout its history, it's had a return of a little under 2% in comparison to the S&P 500 index, which of course is going to be a riskier investment in terms of in the stock market there, but a 40% return compared to a 2% return, you don't like to see that. Aspiration, this flagship fund, it would be interesting if we could compare it during a downturn in the economy, and I'm sure that its losses would be much less in comparison to the S&P 500. But maybe this is the way you want to go if you're not looking for a riskier type of fund. Maybe you're in your retirement, or you're just looking for a place to put your money and get a very small, consistent type of return, then perhaps this Aspiration Flagship Fund is what you're looking for. But again, not a great return that we've been seeing out of this fund since its inception, but it is what it is. It's a very conservative fund that isn't meant to blow things out of the water like the S&P 500 can do when the economy is running as well as it has been during this particular period of time. So that's pretty much going to wrap up this video, guys. If you have any other funds that you want me to spotlight, you can throw those down in the comment section. Subscribe for more of this type of video content, and we hope to see you in the future. Bye.